Hi there, a very good morning and good afternoon to all of you. And today in this video, I'm going to talk about Dixon technology and what is the complete picture at the moment, what do you need to do at these prices, and where we see the stock moving and why were the results so bad. So we'll discuss about that and where could the stock head, I mean, over the next 4 or 5 years, what could be my call, my understanding of the numbers and the results, etc. So we'll discuss about these things in detail. So let's get started. First of all, a disclaimer that this is not a stock recommendation and people taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. I'm not a SEBI registered member of NSE or BSC, and I'm not going to, these are not stock calls or buy calls or sell calls on any of the stocks. So any stock trading activity or any investment that you're going to do is under your own discretion, and I am not liable for any profits or losses that you'll be doing trading or investing into these companies. These all these videos are purely for educational purposes and not to execute any trade or investment in that regard. Before I talk about, you can say, Dixon, his small request, kindly support me on Patreon. Once you do that, help me grow the channel. Help you also ask me questions and eke out answers in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and number of podcasts I put up from time to time on short term, long term calls, 3, 4 calls that I give, on which you can probably analyze as to how these stocks are performing. So you can do that. You can ask me queries, and if you pay $100 upfront, you get 1 year access by paying for 10 months. For detailed market or company talk, you can directly email me. And also, if you cannot pay on Patreon, you can become a YouTube member on an annual basis, or become a you can say YouTube member on a monthly basis, or a WhatsApp member on an annual basis. For WhatsApp membership, you need to email me. So that's the point. And a slight note on for the Patreon members and the members, I'll be putting up both the watch list today, and I'll be putting up the 3, 4 calls by evening today. So I was working on it, and so I'll be doing that by afternoon or evening. You'll have it. Now about the company. Established in 1993, Dixon Tech is a leading electronic manufacturer, and they also manufacture consumer durable products like washing machines, etc. Boast of best clients in the business, ACs, and many other products that they produce. Now, the stock has fallen sharply by around 20-25% from the recent levels, and actually has fallen more than 50% at the lows from the highs. And the market cap has now, you can say, shrunk to around 17,000 crores. And at the lows, the market cap was, I think, around these levels, 16,000 crores or so, even lower. The clientele include CB Plus, Xiaomi, Samsung phones, and all washing machines, Geo set-top box, etc. And there's an announcement as well that they have tied up with Google for the Google Android television, you can say, production. So that will commence in the second quarter of FY24. So we will look forward to that as well. In terms of numbers, this is where the, you can say, the disappointment was, and that's why the stock fell in January. Sales went down by 20% from 3,000 crores to 2,400 crores, although profit went up owing to higher margins. Margins improved from 4% to 5%. Profit went up by around 13% or so to around 52 crores. But the way the sales dropped really marred the market, and I'll let you know as to why the fall really happened later on. But basically, the valuations were so stretched at 100 times that any disappointment on the result, this is exactly what happens. And the stock slammed to around 65 times on the PE basis versus 100 times. So the complete slash of 35% for the stock in terms of valuations. So this is the revenue picture at the moment. Now the company guided for 15-16,000 crores, even more for FY23. They will end up, I think expectation is around 12,000 crores will be the annual sales. Now this is tremendous from FY19, from 3,000 crores to go up to 12,000 crores is also a no mean feat. And in terms of profitability also, from around 63 crores, they're going to come up with somewhere close to 240 crores this time around. That's a 4x jump over 4 years. But you need to understand that during the pandemic, things were really good for the company because people were working from home, so they wanted better, you can say, furnishing better electronic products at home, because they were spending most of their time at home. So most of their products, most of products of Dixon sold during 2021 and 22. So if you compare numbers from FY21, it will look very, you can say, it won't look that great. But if you look from FY19 perspective, the numbers are looking pretty good. And you need to look at in that manner. So when we'll discuss about valuations, etc., we'll discuss about the fact that there is always a recency bias. Let's look at the margins. So margins have again gone up to 5%, which is a commendable effort. It was hovering around 3% in FY17-18, went to 5% and then dropped again during the pandemic. Now it's back to 5%, which is a decent margin for a, you can say, a manufacturing company, not a direct, you can say, original manufacturer, but somebody who is a contract manufacturer. The margins are decent. If they can just, you can say, swell this up to 7% over the next 2 3 years, that would be pretty good. So this is the sales segment wise breakup. Basically, their sales comes from LED televisions. 48% of their sales come from there. Home appliances contribute to around 9% of their sales. Lighting is around 26%. Mobile phones 12%, and their security systems and set-top boxes, etc., which is around 5%. Now, their LED television domain was flat year on year, dipped a little bit, but major dip came in their lighting business, which dipped in revenue by around 30 35%. Their other products like washing machines, etc., did grow. So their other products division did grow, but mobile phones division dropped also sharply, and the lighting division dropped by both, I think, dropped between 25 to 35% in terms of annual sales. In terms of production capacity per million, lighting production capacity is going to get even bigger, 240 million that they are doing. Mobile phones is around 40 million. And if you look at LED televisions, it's around 4.4 million at the moment. They are planning to increase this to around 7 million, 7 to 8 million over the next 2 3 years. They're going to double this. And they are getting orders now. They have this tie up with Google, the, you can say, trials will begin in Q1 of FY24, and I think production should start if everything goes well from Q2 onwards. So this is something to look forward to. I think the stock price may move up by that time or so, and may continue to surge because the sales of such kind of products, Google Android television, is around 60 65% of the total sales that takes place in India. So this is a huge, you can say, tie up that they have done. So before I talk about this more, let me just discuss about why the stock really fell. So basically, and why the numbers were so bad. So there were 2 3 reasons for that the company pointed out during the con call. First reason for the, you can say, the big fall in the stock, in the, you can say, sales number, has been the lower demand, taper demand, and we all know about what is happening in global, you can say, consumption pattern. That demand has completely got, you can say, stalled for the last 2 3 quarters, and so a demand from global peers, from even in India, weren't that great, and so demand dipped so much that the sales had to dip in that manner. Plus, their television division, LED division, they were selling on a basis in terms of, you can say, a price per sale, or every individual that buying average, you can say, price that they were paying for television was around 16,000 rupees, which has dipped to 11,000 rupees. So people are looking to buy into not premium kind of televisions now or LEDs, but looking for value and looking for better prices because of the kind of economic situation we are in, because of the kind of, you can say, inflationary situation that we are in. The third reason in here is the kind of inflationary jump that all the raw material prices have had, and due to that, what has happened is that they had to, I mean, increase capacity, but they were not making as much as they were looking to sell. So they were working at 80-90% capacity, but expansion got stalled and many other things happened. So due to that also, eventually sales were not that great as was envisaged. Another reason that the company gave was that in the month last year, the Diwali season or Diwali took place in November. So Diwali was in November, so most of the sales happened in October, which was Q3, whereas this time around Diwali happened in you can say mid-October, and so most of their sales happened in August and September, and so that was the reason that the sales figures were much better in Q3 compared to last year or a year before, even in FY 18-19. And the Q2. So the Q2 numbers were pretty good compared to last 3-4 years, and Q3 numbers got you can say damaged just because of the fact this is one of the reasons that most of the sales happened in September because Diwali took place in October. So these were some of the reasons that the company gave, and probably this slowdown, if we take it as a slowdown in the consumption domain, slowdown in this space for the last year or so. I think if this continues for one more year, it could be a possibility, but the valuations now look much better from a long term point of view. I'm not talking short term here on these kind of stocks. In fact, if you really want to get short term calls, etc., you can subscribe to the Patreon network or on WhatsApp. But I can say one thing that, and then we'll discuss about the charts also after I complete this presentation, that if the stock is not good on charts, it's really not a short term play. So I'm talking 5, 6, 8, 10 years down the line. I think at these valuations with the 1.5 time sales, it is looking good. So strong clientele in many domains. Let's discuss about the moat. So heavy institutional HNI investment, although institutions have you can say reduced some stake, but still real interest from institutions and everyone. Consumer durable electronic business is in early stages in India. If you look at 10 years down the line, I believe that with better electrification and a rural demand that will pick up. Rural demand has completely gone down over the last couple of years. We've seen that happen. And so once that picks up and then electrification across India over a period of time, I think this business is going to pick up big time. So tied up with Google for Android TV production to start in say Q2 of FY24, which is not far off. So I believe that this is a big thing because the sales numbers will pick up big time because this was not at all you can say in the picture 2-3 years down the line, so 2-3 years back. So this is a big tie-up, and hopefully numbers should pick up because of this big play on higher middle class consumption, and that is going to just pick up as more people get into this higher middle class domain. I think sales of Dixon should pick up. Okay, so now let's just discuss about the charts, and let me take you to the Screener website to just have a look at how the charts are working or how the charts are doing at the moment. So this is the Dixon Tech stock. 17,800 crore is the market cap. Around 3,000 rupees is the stock currently. Remember that if we just do a 2 year you can say charting on this or 3 year charting on this, we would come to know that the highs were around something like 6,000, 5,500, 5,600. Let's say 5,600 was the high, and currently when the stock fell, it went to nearly 2,700. So below 50%, more than 50% got wiped out. Heavy volume selling took place in the stock in the last you can say 2 months or so, 2 months ago or so. Once the result came out, it was trading around 3,500 and suddenly it fell to around 2,600 or so. And finally, after making double bottom, it has moved up, but not a technical pick at all. With the kind of you can say selling that has taken place, 50 and 200 DMA is way above it, so the stock is trading way below it. But what is interesting to understand here is that PE, which was around 100 earlier, uh, has now gone to 70, and which gives me confidence that the stock is trading at very interesting levels. So if you look at a PE ratio altogether, Then the stock has on an average over the last 5 years had a PE of around 73. The stock at lows had a PE of around 68, currently at 74, 75. So it is trading at, you can say, average PE of their 5 years. So in that regard, the stock looks extremely attractive from a 5 year perspective. Uh, the highest PE it went to was around 170 in October 21, 180. So even if we take an average of these two figures, we would be somewhere around, say, 124. So in a very good business environment, if the market really picks up, the stock could trade at a PE of 120, 125. So that's my understanding. So I believe that these are very good levels to get into the stock. If you look at the balance sheet, it's pretty robust. 1100 crores of, you can say, reserves are there. Only 400 crores of debt. Debt has reduced over the last year or so. And yes, in terms of shareholding pattern, people would have sold. So I think FIIs and DIIs would have reduced their stake. But at these levels, with the kind of tie-up that the company has had, and the fact that that going forward over the next 6 to 8 years, consumption into this electronic domain is going to pick up, and is one of the biggest play in there. This is the biggest moat of Dixon Technology, that right now no other player has so much in terms of gambit of products that Dixon has. So I believe trading at around 1.5 times sales. And if we say they did 12,200 crores of sales this time around, if we say there's a 15% growth in sales next year, then on that you could say that the company is going to set to do somewhere close to 14,000 crores. So 14,000 crores of sales is pretty much possible minimum. I think it's going to go up even further. 15, 16,000 crores of sales is what the company is going to do at around 18,000 crores market cap. If a company is doing 15,000 crores of sales, I think 1.2 times sale, 2 times sales 1 year forward is pretty interesting, because if you look at on the market cap to sales basis as well, the company on an average trades at around 1.7 times. So 1 year forward, 1.2 times looks good. Even now it is trading at 1.5 times sales. So again, the stock looks attractive. I'm not saying that on a short term basis one should buy, but pre-pandemic as well, the stock used to trade at around 1 time sales. So I think any 5-7% decline for any reason, if that happens, and you get the stock at 2800, 2900, 2750, 2800, those are very good levels to get into Dixon Technology from a 5 year perspective. On a shorter term perspective, it's an avoid, and you can only buy if I'm looking at just a small glance at the stock, only buy above this yellow line. So only buy above 3200. No, so on a shorter term basis above 3200, on long term basis any dip towards 2900 to 2800, Dixon is a very good buy. So what needs to be done, in my opinion, is you can buy at current market price and on declines, and keep track of numbers. So it's not that you have to buy and just forget the stock. If the numbers dip even further, you can always take an exit. But if somebody is holding on to the stock, you can hold for the next 5 years, wait for the numbers to improve, and I think things should improve. If it goes to 24, 2500 and numbers are okayish, not very bad, then probably you can even add. But you have to understand, if the business perspective or the business cycle or the business reasoning for the business for buying the business changes, then you need to exit the stock. I think it should give consistent returns from here, very decent levels to buy into. So this is a video on Dixon Technology. Please like and subscribe my channel, hit the bell icon so you get my video straight away when I post it, and kindly support me on Patreon. Thanks a lot for watching.